Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. While we are celebrating that it's Friday, the market isn't, because that's down and out in today's trading session. Almost trading near the day's lowest point as of now is what the Nifty is doing. You can see it, right? 25,170 around that mark is what the Nifty is trading at. Sensex is also down. So almost 0.7% of decline is what we're seeing coming in for the benchmark indices. Other than that, the broader end of the market, that is not doing anything as well, right? Whether you look at the mid cap as well as the small cap, both of them are down in trade as well. 0.7% of decline coming in for the mid cap end of the market, as well as the small cap end of the market is down 0.9%. So clearly, advance decline ratio today is obviously in the favor of declines versus advances. Where's the bright spot, or where's the green on the screen today? Coming in from the FMCG pack as well as the pharma pack. Obviously, HUL news flow that came in, Glenmark news flow that's come in, and on the back of Glenmark, we're seeing even Walk Hard is buzzing in trade. We're seeing Spark that's buzzing in trade as well. So that is something that's where we're seeing a bit of a bright spot coming in. But this is a show where we solve all your stock-related queries, and that is what we'll be doing today as well. We have Shahina Mukadam, independent market expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher, joining in with us. Shahina as well as Vaishali, good afternoon, and thank you so much for joining in with us as always. Vaishali, before we jump to the queries, a quick check on the markets. What are the levels we should keep an eye out on? Because now we have, gone below those levels that one was keeping an eye out on, the downside of 25,400, 300. Now we're at 25,170 levels. So how important is the next level to watch out for, and what is that?
Hi, very good afternoon. So yesterday we saw Nifty was breaking the near-term support of 25,400. So today also the correction continues, and I think it should halt at 25,000 levels. But if it doesn't, then I think it can slide further towards 24,700, 24,800. So I would say now the upside is capped at 25,500 for now, and we'll wait and watch, because if 25,000 levels break, we would be seeing some further profit booking. And as far as Bank Nifty is concerned, well, we are seeing near-term resistance at 57,500, and the near-term support is also 56,500. So, it's at a make or break level, and if that breaks, it could probably go towards 55,500. But so far, Bank Nifty is still holding on. It's the IT sector which is given.
Okay. That's the view coming in on the markets, Nifty, Bank Nifty, keeping an eye out on those levels over there. Let's get started with the queries for today then. The first query is an investment query that we have. This is coming in from Kishore Nayak, who's writing to us from Gujarat. He says, and he's asking if he can look at buying Shriram Finance for the long term at these levels. Shriram Finance, Shahina, what's your view coming in on this one? Is it one of those better placed in the financial world that one could look at? NBFCs, banks, what are you watching out for? And would this be a better bet?
Yeah, so it is among the top 5 NBFCs, and valuations also not expensive. If you look at 1 year forward FY27, it's just about 1.7 times price to book. The size of the assets, total assets, is quite large, 2.6 lakh crores. And while FY26 may see a slight lower growth, we may see a growth of about 15% versus something like a 17-18% last year. At the same time, I think, it's fairly valued. So one can look to enter at current levels. Of course, given the way the markets are moving, it's better to do a sort of SIP in most of your investments that you're making as of now, which includes Shriram Finance.
Okay, that's the word coming in there on the fundamental front. On the technicals, also, does Shriram Finance make the bet for the long-term story, Vaishali?
I do agree, because actually so far we've seen that this is one of the stocks in the NBFC which has done very well, and it continues to be in an upward trend. So even when I'm looking at a weekly chart, since the view is for a longer term perspective, I think this stock is ready for making new highs, all going well. So 600 would act as a near-term support, and we are waiting for a breakout. If it goes above 730 levels, I think this will be poised for even higher levels. So for now, my view would be positive for 750 levels. Then let's have a relook.
Okay, till 750 the view is positive, then one can see have a relook at the stock once that's achieved. Let's move on to the next query for today. We have Venugopal, who is writing to us from Chennai. He's holding 57 shares of Asian Paints. Price is 3,016 rupees per share. Wants to know the long-term view on this one. Okay, right now, obviously, he's making a loss. Asian Paints as such has not done, pretty much anything in terms of a return. Shahina, Asian Paints and this industry overall has also seen so much happening in the recent time as well, right? AkzoNobel, the takeover coming in there. Then obviously just this week, I think Asian Paints also sold their stake in AkzoNobel, which they purchased a few years ago. So what are we watching out now for Asian Paints specifically? Is there a story that, maybe the viewer could actually come back to those 3,000 levels and recover the cost at least?
Vinny, the only one positive which I see for the near term is the AkzoNobel's, the stake sale, which will bring in some money into the company. But it is not, very huge. And at the same time, I think the competition, the negatives are quite substantial. There is a lot of competition that is coming in. In fact, AkzoNobel's stake was acquired by JSW Paints. So there now, I think they are looking to become a bigger player. And of course, Birla is always like they launched it last year and they are gaining market share. So the segment has become very competitive. So here I see a pressure on overall average realizations over the next 1 year. And margins, we will have to see. They were affected last year. If raw material, the crude oil prices come down, they may see some bit of stabilization. At the same time, I see there is a bit of consolidation that's happening in Asian Paints. So if you want to hold, you can hold with a strict stop loss and sell it, or switch at any bounce, or you can even switch as of now. I mean, I would say I would be equal weight to either of the two scenarios.
Okay. Vaishali, on the charts and technicals, what are we watching out for? Because right now what I'm looking at it on the long-term basis seems like, every time it crosses the 3,500 and around that level, then again we see a fall, then again it goes back to those levels. Does it merit that, now maybe on the charts and technicals, at least we could see a bit of a comeback for the stock?
I would say, Vinny, I would take this as a trading strategy. Hard to tell right now for a long-term perspective, because the stock, after a deep corrective move, has given a long consolidation at 2,200. So that means it's made a very strong base at 2,300. Currently, it's shown a rally, and we are seeing some retracement. So as long as 2,300 levels is held on, and once we see the stock moving about 2,600, can one expect higher targets of 2,800 to 3,000 levels? But till then, I would take it as a trading bet. 2,300 acts as a support. It needs to cross 2,550, and then we look for higher targets.
Okay, it has to cross 2,550 first, then you can look at a higher target coming in there and keep an eye out on that support level also that is mentioned by Vaishali. Next query for today coming in from Chandra Moli, who is writing to us from Tamil Nadu. He's holding 600 shares of Laurus Labs. This is at a price of 25 rupees per share, making a profit on this one. Wants to know whether he should sell at current levels or continue to hold this one. Shahina, Laurus Labs, what are we watching out for here? Obviously there is that CDMO side and CDRO side that comes in for the company as well. There's a lot more other, segments that they are working on. Laurus Labs, should they book out their profits, given that they're making a considerable one, right? From 425 to 700, above that mark right now. So what should they do?
Yeah, so Vinny, those are the positives. They are into contract manufacturing, and that is the positive in terms of they are a high growth story. They have been, at least. The problems of here are that one is it is expensive at current valuations. Two is that there is some likelihood that the growth may slow down. You can expect something like a 15% growth over the next 2 to 3 years. And the issue over here is whether they will be impacted by the tariffs that the US government is going to be putting on pharmaceuticals. Over the medium term, we will come to know. And that is an important market for the company. In fact, international sales account for about more than 60% of the total revenues. So we will have to wait and watch as to how that will evolve. So I would say take part profits and the remaining you can hold for the longer term, because the company is making acquisitions in various other segments, like, for example, in gene therapy. And those may be long-term opportunities, but at current level, short-term, it is expensive.
Okay. So yes, keeping an eye out over there. A bit expensive for the short term. That's the view there. Laurus Labs on the charts and technicals also. What is it looking like, Vaishali? Should they continue to hold or book out profits?
I would say actually technically too, it has given a one-way run up right from 600 levels to now 800. So of course the stock has come into deep overbought zone. So I would definitely suggest partial profit booking and then wait for a dip because long-term trend, overall trend looks very positive. If it retraces to around 700, 680 levels, it would be an attractive buy at these levels. So yes, partial profit should be
Okay, surely keeping an eye out on that. Let's move on to the next query for today. We have Gurbinder Singh, who's writing to us from Punjab, holding 10 shares of Trent, and this is at a price of 5,408 rupees per share. He is a long-term investor, wants to know whether it's worthwhile to buy more of these at the current level. Trent, Shahina, what's your view coming in? Obviously, it's given an investor fabulous returns, especially since COVID to now, 2022 to 2025, good returns coming in. But obviously, the updates have come in terms of the AGM as well, where the company was talking about the growth outlook to be at around 20%, while they had spoken about 35% growth CAGR, which we've seen for the company in the past years. Does this mean there's some bit of a concern coming in, and what should the viewer do now?
Yes, so the outlook was a bit disappointing, 20% versus the 25% we've seen in the past year, and which is also again a decline that we saw over the previous year. So basically, we are seeing a declining trend of the growth rate. That is one, and second is it is expensive. Even if you add in the valuation for Zara and for Zudio and for the various subsidiaries that they have, there also the valuation is actually coming down to is just about 70 times. So even if you exclude it, it's 80 times P multiple 1 year forward. So I think it is expensive. So do not add at current levels. I would say a better level to add it would be at least 10% lower than current levels. So you could wait, and it's a good quality stock, and definitely in terms of management. But I see some issues over here in terms of the shorter term. So wait and add it at lower levels.
Okay, wait and add it at lower levels. That's a word on the fundamentals. And technicals also, would you say wait before they add some more?
I definitely would say so because, well, we have seen a one good corrective move. Right now, it is at a make or break level. If we see the stock falling below 53.50, this is ready for a target of 4,800 to start with. So I would say just wait it out. Let's wait for some stock, the stock to stabilize, show some clarity. But for now, it's on a corrective mode.
Okay. So wait for some bit of a time before you actually enter a trend as of now. Adding some more. So wait for some time. On that note, actually, let's just take a very short break. But remember that you can always tune into the all-new CNBC TV18 Prime that is bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back to Your Stocks on CNBC TV18. Let's keep it going with all the stock-related queries. Now, this next query is come from Jyoti from Mumbai. She is holding 60 shares of DreamFolks Services. She's bought it at a price of 511 rupees per share. Wants to know if she should book her losses or stay invested. Your view coming in on this one, Shahina. She's making a considerable loss because the stock is already at 159. She's bought it at 500. What's the story now?
Yeah, after the huge stock, the fall in the stock price, the valuations are not expensive for the historical valuations. Having said that, I still think that she needs to exit from the stock. There are a lot of negatives that have happened in the near term, which are likely to affect their business. One is their large, contributors to revenues. Banks, ICICI Bank, Axis Bank have actually I believe, discontinued their tie-up with DreamFolks for the airports. Two is Adani is looking to actually, be there by themselves in their own capacity in the same business, which is likely to be a problem for the company. And DreamFolks will have to actually then revisit the whole business, how they are going to sort of replace the exiting business and get in new companies to, new banks to tie up with them, or how exactly they're going to grow in terms of margins. Also, their margins are under pressure. So I would say it is better to exit. There are too many variables which are negative.
Okay, better to exit. Too many variables there. Vaishali, on the charts and technicals also, would that be the suggestion?
I would say so. It has been just a downhill right now since a very long time. There is no respite. I think one should exit and move on to a better quality stock.
Okay. Exit and move on to some other stocks is the word coming in there. Let's move on to the next query then for today. This is coming in from K. Padma, who's writing to us from New Delhi. She wants to invest in LIC and is asking if it's the right time to enter this one, and for the long term, what does does it merit entering LIC versus other insurance companies? Your view on this, Shahina?
Yeah, LIC is in terms of valuation much better placed than the other insurance companies. So yes, you can buy LIC. At the same time, I would still prefer that you buy it at slightly lower levels, maybe between 800 and 900 rupees. You can average it out between this level so that you can make a decent amount of money over the next 1 year. Here, the valuations are good, as I mentioned. Embedded value is just about, if you compare it to price, just about 0.8 times, which in my view is quite attractive. Going forward in FY26, while we may see low single-digit growth in terms of the overall business, in premiums, in the number of policies sold, but I think margins are likely to improve because they are moving on to the non-par side of business, which is actually which enjoys better margins, of course, because they don't have to share their profits and bonuses, etc. So all said and done, I think you could enter into LIC by 10 dips.
Okay, could enter into LIC right now as well. What is the word coming in on the fundamentals? On the technicals, what should one be doing? LIC, given that, in the last couple of months, we have seen the stock run up, Vaishali. So, is it the right time right now to enter, or maybe wait for some bit of a lower level or some bit of a correction there?
I would say, Shahina, it's already in an uptrend. Yes, agreed. But sometimes when the stock is having an inherent strength, it may not correct also. So I would say accumulation would be the best strategy. Right now it's at, of course, 924. And a good strong support comes at around 850, 860. So I would say accumulate from here on at every dip, and so that you can get a better price and then wait for the run.
Okay. Next query for today is coming from Neil Deshpande. He's writing to us from Mumbai. 300 shares of SAIL is what he's holding at a price of 160 rupees per share, and another stock also he's holding, that is NHPC. Here, 500 shares at a price of 115 rupees per share. So they're making a loss on SAIL as well as NHPC as of now. Wants to know whether should they continue to hold or look to exit at current levels. Shahina?
Basically, after the stock having corrected, we are seeing a slight bit of rebound in both the stocks. So at current levels, I would say a hold. There are positives that are there in both of these stories, which have seen that slight bit of rebound. So I would wait for a better price to exit or switch. In SAIL, what has happened is that the government has actually recently put in they put in a 12% safeguard duty. Now, this will to some extent, protect SAIL, which actually has a large part of its sales from domestic, the domestic market. So to some extent, it will protect it. Also, overall steel prices are stabilizing. If you see a 1 year period, they're slightly soft, but they're stabilizing. So to that extent, I think SAIL should, have reasonable amount of shows reasonable performance for the year. I would hold, but then again, we have to see what will happen in the international market because of the tariffs being very high, 50% tariffs. So how they will manage that and what will be the impact of it on the global steel prices. As of now, it's a hold. Now for NHPC, one of their major projects, which is 800 megawatt HP, the Himachal Pradesh power plant has actually commenced operations in April. So that is going to contribute to a large chunk to a growth in revenues. Having said that, there I think the margins are under pressure. So, but in terms of numbers also, maybe the current year will be better than the previous year to some extent. So to that extent, you wait and then look for a bounce to switch from both these stocks.
Okay, wait out for a bounce from both stocks as well. But on the technicals, Vaishali, what are we watching out for? SAIL as well as NHPC. And given that they are making a loss, would it also merit maybe to, average out a bit right now?
Yes, I was just going to say that because actually, depending on the time period that he's trying to hold, if he's a trader, of course, one needs to keep a trading stop loss because market is going through the whipsaws and we are awaiting the big event. So now, if it's for a longer term perspective, yes, do accumulate. If it dips at around 120, 125, that would be a good buying opportunity once again to average out his cost. Now, talking about NHPC, it's already in a good established trend. The stock showed a good momentum even yesterday. Technically, it is showing strength with a support of 8,400, and we would now look at a near-term trading target of 92. Once we see a clarity of the stock going above, I think we can have a possible target of 110, 115. So in my opinion, this makes a fair level to again averaging it out.
Okay, I can look to average also. That's the word coming in there. Okay, that was the last query for today. So thank you so much, Vaishali as well as Shahina for joining in with us as always. And hope you'll have a great weekend. And viewers, thank you so much, as always, for sending us your queries. Remember, you can always send us your queries. Keep sending us your queries. We'll solve them Monday, Wednesdays and Fridays with our experts. But thank you so much for tuning in today as well. Don't go anywhere. Up next, we have Closing Bell to take you through the last hour of trade.